Why is financial literacy important to the Christian? Stick around.
Exploring theology, doctrine, and all of the fascinating subjects in between, broadcasting from an undisclosed location, Dead Men Walking starts
now.
Well, hello, everyone. Welcome back to another episode of Dead Men Walking Podcast. I'm your host, Greg Moore. You can find out more about us at DMWpodcast.com or follow us on socials, really anywhere, at Dead Men Walking Podcast, Facebook, Instagram, Twitter, X, the whole 9 yards. Appreciate you guys coming along for the ride. Thank you for listening to another episode. Thank you for sharing with a friend. And thank you for those who sponsor the show. And I have two great sponsors for you. I want to talk to you very quickly before we get into the episode. AdventDS technology is one of the most important tools in our world today, and its usefulness grows every year. Whether you're a business or a ministry, having an app or website is no longer an optional. It is essential. If you're listening to this, you already likely have one. You're thinking about getting one built soon, but who can you trust to do this, guys? You can only trust one company. It's AdventDS. Bruce at AdventDS, friend of mine, actually building out my website for my brokerage and doing a phenomenal job. He kept hearing the question, Bruce did, who can I trust? How can I do this? And he said, well, it's got to be me. So Advent Digital Solutions is a Christ-centered software and web development company. They specialize in building and maintaining websites and mobile apps for Christian ministries, projects, and businesses. With AdventDS, you can trust that your technology will be cutting edge without ever compromising your faith or values that drive your mission. So guys, if you're doing website design, digital CRM, SEO stuff, anything where you own a business or you're an influencer at your business, you got to call AdventDS. I trust these guys. I know these guys. They've done work for me. I wouldn't send you to them if I didn't. Just click on the link below and you have contact info where you can find them, reach out to them. AdventDS, check those guys out. Also, Dominion Wealth, same thing. No Josiah personally, no Justin personally. I mean, these are the only distinctly reformed financial company, full service financial planning and wealth management. We're talking about wealth today. We're talking about finances today on the episode. This is very important for Christians to get and understand. Listen, you got to place your money with Christians, not degenerates. Dominion Wealth Strategists, those are the guys that you need to talk to. They do budgeting, debt management, savings, life and health insurance, retirement planning, estate planning, business services. I mean, they got you covered every which way. Personal, business, nonprofit, church finance. Give them a call. Same thing. Even if you are not a business owner and you just work a job, you need to take care of your finances. These guys do it all. Their motto, all of Christ for all of life, all of finance for all of Christendom. And so easy to find them. www.reform.money, one of the best URLs on the internet. But of course, you can click in the link below too. Find these guys. The estate planning guys and the business services, retirement planning, super, super important, especially if we're looking at creating generational wealth, passing on wealth to our children and our children's children like a wise man does, like Proverbs says. So remember, Dominion Wealth Strategists, from baptism to burial, Dominion has you covered. All right, guys. So we got to talk to Chuck today. He's from Family Private Banking. He does whole life insurance. We wanted to talk about what that was, what that looks like, why it's important for Christians to know how to invest, how that's different than putting your money in a savings account. And I found it very interesting. You know, I'm in real estate, which is kind of an investment kind of opportunity anyway. But Chuck was just a wealth of knowledge. He's been all over the place. He's got one heck of a bio. And I think you say his last name, it's Chuck DeLadurantey. And I want to make sure I'm saying that right. If not, Chuck, if you're listening to this, you can go ahead and correct me. But I mean, was in the finance sector for a while, worked with the Navy, I believe he said, for a while. At 66, said, what am I going to do for generational wealth? He's a post-mill guy. He's a Dominion mandate guy. And it was just fun to talk both finance and theology with him. We got into all kinds of cool stuff on that. He explained whole life a little bit more to me, which I didn't know quite about as much. I know a little bit more about real estate than I do about that, but just very interesting. Runs a great company, and we want to talk about the importance of finance for Christians, what we should be doing with our money. You know, the servant that buried his money and gave back exactly what the master gave him was admonished, yet the one that went out and made money work for him, doubled, quadrupled, tripled, whatever his money, that was the servant that was called well done and good job. So we want to do the same. Any cash flow we have coming in, we want to make sure we're stewarding it well, but also wisely and discerning how we can make that money work for us. And this was a great conversation on that. So, guys, we're going to jump right into it. I won't belabor the point anymore. Next thing you hear is a conversation with me and Chuck. Here we go. Oh, yeah. So, Chuck, welcome to Dead Men Walking podcast, brother. Good to see you again.
Hey, good to see you too, brother.
Now, I know we met in person down in Fort Worth, Texas at Fight, Laugh, Feast, Prodigal America. We didn't get a chance to connect there, but definitely wanted to have you back on the podcast to kind of talk about what it is you do, along with some of the important things that you're doing within the Christian community as well. But before we get into that, can you just give a little bio, give us the origin story of Chuck, and let us know where you're from and what you're all about?
Perfect. Well, glad to be with you. Yeah. So, I was born and raised in Ohio. So in Youngstown, Ohio, of all places.
Not too far from me.
I went to college in Michigan, met my wife in another great Rust Belt state, Michigan, and the city of Flint, believe it or not. So I started out in the automotive business as an engineer, had an engineer background and training, and worked in that for 20 plus years. And I had a rare opportunity about 20 years into that career to switch careers and get into healthcare. And I did what they called a Lean Six Sigma Master Black Belt, which sounds pretty heavy duty, but basically it's how to make process and performance improvement for companies. And I worked originally in large healthcare firms, and then I've also done work in smaller companies, 10 million and under in revenue, but I've also worked in billion-dollar companies as a high-paid consultant, director for improvement services, if you will, for a couple of tours of duty, if you will, and also worked in the military medical commands for both the Army and the Navy. So that spans that part of my career. And about 5 years ago, I was taking a look at my life and saying, okay, what do I do next? I'm approaching what would be traditionally called retirement age. I'm now 71. But at that time, I was 66, and I said, well, do I really think I can continue to do this commute and do this gig that I'm doing for the Navy Medical Command? And I was thinking back about 25 years ago when I was consulting and making quite a bit of money, and I had two gentlemen working with me on the road. In consulting, there's really no overhead. You have a briefcase and an airline ticket.
Sure.
And I said to myself, well, wait a minute, that guy told me about this idea of putting together a capitalized account and then using it for the rest of your life and build legacy wealth as well. So that really struck a chord with me. And I began to do my research again, and I revisited the concepts, and that's how I found private family banking. So full circle on the career side, that's what happened to me, and we'll go into the details of what private family banking, finance yourself means a little bit further into the interview. In the meantime, on the personal side, we were single income, and so other than the first few years of our marriage, we started having children, and we decided to homeschool our kids. We homeschooled 11 children. We have now 25 grandchildren. 24th was just born a month ago, and then the 25th in May of 2025. So we'll have 25 and 25.
Wow.
So pretty awesome. It was an adventure homeschooling. We totally advocate it. We definitely think we're not public school advocates by any sense of the word. And we did a lot of things with our family. We were very entrepreneurial. So I always had this entrepreneurial mindset. So now that's what I do. I'm self-employed. I love what I do. I love people. I love helping people. We help people of all ages from 18 to 75, if you will, and even 80-year-olds, depending on where they're at. We can all go all the way up to age 85. But our core business is between 18-year-olds and about 65-year-olds. So, but if we get north of 60, we usually take a look at some alternative products, but the private family banking concept is core. And so I got into this, and I thought about legacy wealth over the years, but like many of your guests and your listeners, rather, we're all struggling as a single income provider, and we're struggling with how do I find that money? How can I multiply my money? And we either can get tempted into doing risky things, or we can just sit back and think, well, it's just going to wash over me. There's nothing I can do about it. So I'm here to help all of those conditions and problems and encourage people.
No, that's a really good kind of juxtaposition you put up there, because most people I run into that are business owners, that's how they feel. They feel like, well, I can either do something that I don't know a whole lot about and it feels pretty risky with the little capital that I do have to keep this business going, or I just kind of do nothing and just make sure, not losing money is better than risking it and losing money. Before we get into that though, what years were you homeschooling? Because it sounds like you were homeschooling before homeschooling was cool.
Absolutely. We were homeschooling when it was illegal in Michigan. My wife likes to tell those stories about how we would pull the blinds and shutters, and we wouldn't go out shopping before 3 or 4 o'clock in the afternoon, and so on and so forth. So we started, my oldest daughter's 43. So whatever that is, we probably started in the late 80s.
Yep,
so she was born in 81. So yeah, we would have started in 86, probably 85.
Yeah, so I was homeschooled as well too. I'm same year born, and same thing. It was late 80s, mid to late 80s. Had social services coming to the door, making sure we weren't really going out before 3 o'clock because questions would be asked, why aren't your kids in school? And it was really a weird time in Michigan too, a little scary because there was a federal threat of prosecution as well too, which people don't realize. So the pioneers in homeschooling, my parents, you, really were the trailblazers for what now is a very growing segment of the population.
Absolutely. Yeah, we didn't, when you're a trailblazer, you kind of, if you knew what you didn't know, you probably wouldn't do it. That's a great statement, and you can quote me on that.
Yeah.
You know what I mean? If you were really aware of the risk and you'd probably say, I can't do this. But we were determined. We were convicted, of course. I think that's, as overcomers, as Christians, we should approach life. And I'm a big post-mill guy. I don't know if that's in your bailiwick or not, but I'm a post-mill thinker and doer. In fact, that's my tagline, turning post-mill talk into post-mill action. Yeah. And I think that we ought to be out. We were doing political stuff when the kids were in their teens, the oldest ones. We were doing side businesses. We had a janitorial company, and I would take 10 kids, that's before our 11th was born, and we would swoop this office, man. We would go in and get the entire office done in 1 hour, and their reward was, besides a few bucks for spending money, because, I could charge, for the whole family to do that because we were so efficient. I would take them out at Myers Thrifty Acres, if you remember that, in Michigan. I would take them out to the local Myers store for a 50-cent ice cream cone. Now, those days are long gone, I'm sure. But sure. We used to go out and take 10 kids out for ice cream after doing that. And they looked so much forward to it, and it built camaraderie, teamwork. They learned skills. They learned how to be careful in someone else's space. And they learned a little bit about the common sense of dollars and how you earn it, and that everything isn't given to you. We never had wanted our kids to think that they were entitled to something, the whole entitlement mentality we see in our culture today. In fact, anyway, I'm just reminded of so many things that are going on, and it's a great time to be a Christian, and it's always a great time to be a Christian. But this, as we all know, we have some great hope here that we need to get at it and now. And so part of that is getting your money in you mentioned safety and not losing money, and that we're all about that with us, and not to definitely jump to that now, but just to say and not forget to comment that with our system, you never lose money if you do it the way we teach you to do it, and you always actually increase money tax-free. Yeah. Taxation isn't it interesting that the government, who created the income tax problem, also created all the qualified plans like 401ks, IRAs, and Roths. And those are all imaginations and machinations of the machinery of government, who created the tax problem to begin with. Then they have to show us a way to avoid the tax problem. Well, how about we just don't have the tax problem? Wouldn't that be cool for a guy raising, 8, 10, 11 kids, right, or more?
Yeah. No, you're absolutely right.
Yeah.
Just to piggyback on what you were saying a moment ago, I think every child could benefit from growing up in an entrepreneurial family. My father owned a computer wholesale business, and when I was 12 years old, we were in trade shows that had 60,000 people in it, 250, 350 vendors. he'd hand me a box of sound cards. Don't come back until they're sold. Here's your bottom line. This is the profit margin we need. You figure out how to get rid of them. And people always ask me, you're in elected office, you're in podcast, you speak in front of people. Doesn't that bother you? And he said, look, when you're 12 years old walking up to strangers and you're trying to make a $1,000 deal, you learn real quick how to think on your feet, how to respond to adversity, how to close sales, how to come back with rebuttals, how to build value. All those things I learned by being at trade shows and being part of a family business at a very young age. So to agree with you, I think you did your children a great service to include them in those things. But with that being said, what goes hand in hand with that is also generational wealth, is also managing our wealth properly. It's biblical. Proverbs says a wise man not only leaves a wealth to his children, but also to his children's children, right? So we know God is a generational God, both in his covenants and blessings, as well as wealth. And he wants us to use wealth and have wealth. Now, we don't idolize it. We don't want to love money, but we know that it is a common grace. It is a blessed tool for the Lord when we do have wealth. So let's get on private family banking here and tell me a little bit about what it is exactly that you do and that how you can help believers with their wealth or create wealth.
I want to echo what you just said in the parable of the talents. And Scripture tells us that we're to multiply our money. We're to be creative and innovative. We're not to sit back and put it under our mattress and just return the money back that we got. So we do have a charge there, but we have a moral obligation to not love. The love of money is the root of all kinds of evil, Scripture says. So there's nothing wrong with making a fair profit. There's, we have to labor. He who doesn't provide for his family is worse than an infidel. And that provision isn't just gutting it out and earning a W-2 wage job, but it's doing something with that money, even if you're in a W-2. And I spent years off and on. I spent the first 20 years of my career as a W-2 employee. And then I had different assignments in the last 20 years where I was an executive or I worked on a 1099. And I always liked the 1099 because I got to keep all that money every month and pay the taxes at the end of the year, And so there's one quick move people can do. They can take a look at their W-4, which is your withholding tax if you're an employee, and see if you can increase the deductions. I know I claimed high deductions on it. I have a lot of children, but I tried to pay minimal tax because I didn't want the government to hold my money all year and get a big check at the end of the year. Basically make a loan to the government. I think that's that's number one, poor money management, where you could capture that money. Now, if you spend it every month, then okay, now you have another problem. So how do you find money? This is a little bit different than your typical Dave Ramsey sort of beans and rice. This is taking the money you already have. This is what private family banking is in a nutshell.
Okay.
It's adding one step to the money flow that you already have in your life. That means instead of flowing the money into a checking account and leaving it there and paying bills, you flow it into your own private bank as much as you can. And we start people out with a reasonable amount. And eventually the people who really get this flow much more, maybe sometimes even their paycheck, but that may not be for everybody. But you build up your capital, because imagine if I could show you how to accumulate money, even if you turn around and have to rinse and repeat it back to yourself, and I'll talk about how that happens. But if you built a stack of money that continued to grow for the rest of your life, let's say you're 35 years old, well, you may have another 50 years of money flowing through your life or more. If I told you we could show you how to make money on the bulk of that money you're already going to have coming through your life, would you be interested? Most people are. It's just a matter of retraining your thinking, and it does change. It does cause a change and require a change in your understanding of the value of not only cash flow, because cash flow is king. Cash isn't king. Cash flow is king. If you want to reach retirement, I work with a lot of pre-retirees and retirees as well. And what they didn't figure out is they thought that 401k and a big lump sum of money, a nest egg, was going to last them. But most people can't live on a nest egg of even $2 million today. $2 million with a 4% withdrawal rate, which used to be the rule of thumb, which doesn't exist anymore, you'd be draining that account by $40,000 a year. But try living on $40,000 a year. Of course, you can add Social Security to that. But what happens is people realize the cost of living later in life is going up, as it did these last couple of years, even worse. We're hoping to turn that around soon. We all like to see some price reductions.
Sure.
But unless you start early, and then if you want to pass along legacy wealth, our system will pass along the legacy wealth tax-free. It'll grow tax-free by establishing, we use a high cash value, dividend-paying whole life insurance. And that may sound weird to people. I know Dave Ramsey is totally against whole life insurance, but he doesn't really understand this kind. We've tried to talk with Dave, but Dave's done people a lot of good by getting people who have no control of their money and forcing them to save. So I think that's a good thing. We'd like you to force yourself to save, though, into a different investment, on a different financial product. It's not an investment, it's a savings plan. And then you use our system to make investments. You borrow money, you collateralize loans against your own money to do things like buy cars, buy big ticket items, do kitchen remodels, buy real estate. We have people doing Amazon businesses. We have people who are investors. And when you join us, you join a community of people that are doing this and learning together. So private family banking is capturing your cash flow, building a capital account that always earns a fixed rate of interest, guaranteed rate of interest, and a dividend. And the dividends have been declared for people we work with for over 100 years. So you're not contractually guaranteed to get the dividend, but the dividend's like the bonus. It all compounds. You never lose money. You're protected against lawsuits, and you pass along legacy wealth tax-free. What's there not to like? It's a tremendous turn in the road. I didn't start till I was 66. I accumulated a massive amount of money because I changed my thinking, and I did some money moves, and I got out of the stock market, although I think the market's probably going to turn around. I wouldn't have all my money in the stock market, especially if you're raising a family. That's just kind of like gambling. And if you want to buy Bitcoin and gold and silver, you can do that. You can do it through your privatized banking account. So backing up the conversation, and then I'll turn it back over to you. Imagine banks. My image is fading in and out. I'm sorry.
That's okay.
Yeah. The banks get your money. Do you realize when you make a bank deposit, you have a demand receipt, and the banks have title to your money? When you make a checking account deposit, you're signing over. You're actually making a loan to the bank. That's why they have the contractual right to loan that money out. It's called fractional reserve banking. Well, we think that's like highway robbery. So we want to help people capture the use of their money and not give it to the banks. At least not hold it in there very long. Use it as a transfer mechanism.
Okay, so explain for us that don't know, that are listening, whole life insurance, because I know a lot of people might hear the I word and maybe bristle when you hear, because in other industries, sometimes insurance can give you, I don't know, it gives you an icky feeling if you've ever dealt with, let's say, an insurance adjuster or something like that. That's not this. So explain whole life to me a little bit.
Yeah, so basically there are two types of insurance. There's term insurance. You've heard the phrase buy term and invest the rest. The problem is most people don't invest the rest, even if they bought term. Yeah. But term insurance is only for a set period of time. The term is either 10, 20, 15, 30 years is about the max you can get on a term policy. So if you don't die, and only 1.8% people ever collect death benefit on a term insurance policy, that's an interesting statistic because they don't die. And so I'm kind of a studier of statistics, so that kind of thing kind of catches my attention. So there's term life, and then there's permanent insurance. Permanent insurance, one type of it is this whole life insurance. There are other types of permanent insurance, but what we use for this design is a specially designed whole life. Whole life means you have it no matter how long you live. You have a death benefit. You have life insurance. And while you live, you have living benefits. You have the contractual rights to borrow against the cash that you gain in this policy as you pay premiums. You can front load a ton of money into them depending on your income and net worth. Some people more than others. If you're fairly healthy, you can get a really good rate, as you can with other companies. And then it's used as a warehouse of wealth. So really wealthy people were doing this like big time back in the 80s, and the IRS figured out they were missing a lot of tax money. So they put a cap on it, and they have what they call the modified endowment contract provisions in the IRS code. But we engineer the policy so you never incur what's called a MEC, MEC, modified endowment contract condition, where you'd have to pay taxes on the gains. So that's the real key. This is a whole life, meaning you have it for your whole life. It has a net present value of the death benefit, which is called cash value. That means they're rolling forward some of your death. If you have a $2 million death benefit, you'd have X number of dollars today out of that to use ahead of your death. If you have a terminal illness, or you have to go to a nursing home, or you have a chronic illness, we also have rolled in provisions for that where you can pull ahead the death benefit. In the meantime, you get this stack of money. You have the right to borrow against it up to 94% of that, called cash value. And the interest rate that you borrow on those loans is maxed out at 8%. They've been between 5 and 7% lately. And so you have a guaranteed source of equity and to be able to liquefy that equity in your whole life insurance policy for the rest of your life until you die. And when you die, if you have an open loan, you just let the death benefit pay it off. So a lot of older people might have $100,000, $200,000, $300,000 worth of open loans that they use to travel, they use to improve the house, they use to buy a second home, or will to their grandkids or whatever, and they just let the death benefit pay it off. So for younger people, it's all about the cost of living, right? The things that you're going to do anyway. We're not telling people this is a get-rich-quick scheme or a way to do something you weren't going to do already. It's just a better way to do life with your money.
So if you're saving money, let's say X amount, a certain percentage, a low percentage, and you're going, I'm just putting that in a savings account in a bank. Let's say 20%, 10%. I don't even think most people can do that or do that. But let's say you're doing that. Let's say you're taking 20%, putting it in a savings account that's yielding you literally nothing and hasn't for quite some time. Maybe it jumped up a point or two in the last 2 years, but it's still highway robbery. How the banks, like you say, take your money, use fractional reserve banking, which is unbiblical and horrible anyway. But the whole system is rigged against us just for even a savings account. Would you say you could take that money and do something different with it with private family banking through whole life? Is that what you're saying? You could shift that and it would be better.
Absolutely. So you're going to get, I'm going to be careful here because the numbers move all over, but essentially it's going to be a market value of anywhere from 6 to 9%, depending on how things work out. So you're going to get at least 5% or 6% on your money, and it's going to compound. And it's going to grow and grow and grow, and you have use of the same money. So think about it. If I put $50,000 into one of these systems that we create, I get another $50,000 from the insurance company. I have $100,000 at work. When you do a policy loan against your cash value, you're not taking the money out. You're doing what would be called a collateralized loan, like you would a home equity loan. Everybody understands HELOC. So when you take a HELOC or a home equity loan on your home, you don't have to sell the house, right? You still have the value in the house, but you get $50,000 in a HELOC against the value of your house. Well, all this is, instead of a house, it's a cash asset. It's a different asset class, and you're getting that money instead of a home equity. You have a cash equity. You get 94% of it on a click of a mouse. You approve the loan, and you get the money in 5 days when it's all set up. You put it in your checking account and do whatever you want with it. You determine the payback schedule. So we help amortize it for you. We have a little calculator to help you. But essentially, if the policy is structured right and you're paying a monthly, so we also want you to be on a monthly savings program. So there is a premium that you'll pay monthly, and that can range from high to low depending on where you're at financially. And that adds money also every month to your cash stockpile. And that keeps the life insurance growing as well. So as the life insurance death benefit grows, so does the stockpile of cash. But when you collateralize that loan, you're the banker. You determine if you want to pay it back in 5 years, 10 years, 20 years, or not at all. And some people, like if you're in your, let's say, 40s, you could actually borrow money once you've capitalized your policy pretty steadily and not pay the loans back for 10 years. You can take a payment holiday. Even for younger people, that can be done. Depends on how much money they front load.
Sure.
And a lot of younger people don't have a lot of money. So you don't have to have a lot of money to get started. What I want to make clear is you can start by paying $200-$300 a month in a premium. About half of that for younger people is going to go to cash value. Or you can front load $10,000, $20,000. I have people putting $150,000, $200,000 into these things. I have people putting $100,000 a year in. So that sounds extravagant probably to most of your colleagues and your listeners and mine. But it's sizable, and it's sizable at the beginner level, if you will. But if you don't get started, what you're doing is giving the utility and the use of your money to other people. You know that 34.5% of people's income today is spent on interest paid to others.
Wow.
Think about that. If you could, and we help you capture about half of that. So if you could reduce your out-of-pocket interest costs by 50% just by changing money flow and being healthy enough to be insured. And by the way, if you're not healthy enough, you can insure others. You can insure your wife, your children, your grandchildren, your business partners. So I just want to give you an idea. People who do what I do, now I have 3 pretty good-sized policies. I capitalize quite a bit of money every year into those. But the people who are way bigger and for longer into this than me, and I'm a kind of a latecomer, they'll have 30 or 40 policies in place. They're paying in millions of dollars a year to borrow it back and use it over and over and grow and grow. So that's the big idea. Now, you don't have to have $1 million to get started, but you have to get started. Even if you have, $1,000 and you can pay $200 a month. If you have credit card debt, we show you how to do a debt snowball using the policy. It's counterintuitive. You say, well, I'm going to do Dave Ramsey. I'm going to pay the highest one off first. And I'm going to go to this. Well, we do that, but we do a little bit differently. Instead of paying, so let me give you an example first. Here's the problem that people don't get. They want to buy a new car. So they save up to get a new car. They have $30,000. They walk in the dealership as a cash dealer. When they drive off the lot, what do they have? They have a car, and where's their money? Their money's in the dealer's hands, right?
Yep.
With our system, you save up the money. You have $30,000 in your account. You get another $30,000. Go to the dealer as a cash buyer. Drive off the lot. You still have your $30,000 in your account. You have to pay it back with this loan system that we have. But you are using twice the money in play. And we don't allow you to get, out over your skis where you're going to tumble and make a mistake because there's some provisions in the lending regime.
Sure.
But you have that kind of utility. So when you pay cash, and everybody says, I'm a cash buyer, but you're burning through your capital, what we want to do is see you save $30, $40, $50, $100, $200,000, $300,000 of cash in your private family bank over time. And you'll be able to use that money, rinse and repeat. As you pay it back, you get to use it all over again. And you're multiplying the money that God is already flowing through your life in a safe way. And you're getting a death benefit with, if you die, if you're a younger man and you put enough in there, you're going to have multi-million-dollar death benefit. Most guys are not going to pass on $2 to $3 or $4 or $5 million to their kids. They're just not. I'm not, but I started late. But some of you can, and you're not going to do that tax-free unless you build a business, which would be great too. Bring the kids into the business and then sign the business. But we work on that too. We have ways we work with businesses. You can loan money to your business. You can do a buy-sell plan. You can do a pension plan with us. We have all kinds of ways to deal with businesses.
Yeah, this is always really frustrated me that one, just in general, in public school education, there is absolutely no financial literacy. And when I say financial literacy, I'm not talking about, this is how you write a personal check, right? Like maybe they do some of that. I'm talking about, it really bothered me that I didn't get into real estate and start my real estate brokerage until my early 30s. And then I realized, there's all kinds of ways to move money around and to use debt to your advantage, short-term debt, the first commercial building I bought, and then do a 1031 exchange on it, pull out a loan against that so I can purchase another building, not pay any taxes on that. And it's like, there's these things that I go, well, why didn't I learn these years ago? And especially for Christians, why aren't Christians being more being more wise or have more understanding about the way the financial system works? Now, I'm not deriding anyone or
No,
I'm just saying this kind of stuff always excites me because there's always ways to be smart with our money, to be wise with it, to be discerning with it. It sounds like what you're working in is a way to help Christians. I would say, to segue into this, why is this important for believers? I mean, we know it's good to be, wise stewards of your money, but what other reasons? I heard you say post-mill at the top of the show. I'm optimistic on-mill, so we're right there shoulder and shoulder. I'm not quite there yet, but maybe that's a different podcast episode. Why is it important? Why is it important for Christians to know about this stuff and be looking at their money and be talking to someone like you that might not only have the same theology, but can help them in a financial situation?
You said dominion mandate. Well, I think that's it in the broadest sense. I mean, we do have a be fruitful and multiply mandate, And, being fruitful, you don't pick one apple off a tree. You hope to take the apple and plant another tree. And so first, and we do work with families. We do have a coaching business where we'll create a family charter. We'll create the will, the trust. We'll create the family office, if you will. That's a whole nother portion of our business. So not everybody is equipped to do that. That's the only service that I'll charge for. I work with a partner on that. All my other consulting, just the basic budgeting, the setting it up, you're part of our user community. So you can meet that Dominion mandate and learn from others. So we have a real estate investor as part of our community. He's one of my customers. He has 90 doors under management. For those not in real estate, what I mean is either single family or quads or duplexes. He's got a total of 90 rentals. He also is taking on new customers. You're a passive investor starting at $50,000 for entry into it, which isn't bad for a syndicate. We have people doing Amazon businesses, pastors doing businesses. They'll teach you how to do. We have a collaborative right now that we're working on a way to take your money and multiply it through a for-profit company that's a cash company made up of all these policyholders, mine and several other guys across the country. We hope to take that company public in the spring. There's just multitudes of opportunities. People who have like car wash businesses, people who have other family businesses that come to me and they want to set up their kids for success. But if you don't train your kids about money and if you don't teach them a good biblical construct about what's right, what's wrong, of course, you have to do that. But, we teach our kids a lot of the tenets of the faith. But when it comes to money, many families are lacking in it's basic, mentoring that they need. And so we provide some of that to a lot of the families. And then this idea of expanding it and taking your kids. So if the idea kind of came from the Rockefellers and from the very wealthy people over the years. Where
I was just going to mention that. Yeah.
Yeah, they had a family bank, and if you borrowed from the bank, you had an obligation to pay back the money with a profit. And so that's the simple version of family office and family bank. And I do have clients that are doing that. They're actively creating an entire system of thinking, a code of conduct, a loaning strategy, and all that. That's the big idea of private family.
As we put bookends on this too, I'm always, and maybe this is, like I said, maybe I'll get to post-mill one day. I'm optimistic on mill. I think I'm pretty close there with you, but I'm always looking back and saying, let's look at the bigger picture of things, right? We get caught in these kind of lanes of decades or even 100 years or 150 years. And what I've found is most Christians are assuming the way they use their money, the way they invest their money, they're assuming this kind of Prussian Rockefeller model that's just been introduced over the last 100 and 150 years. And I say, well, let's step back. What did Christ say about money? If we look at the Bible, first of all, I see a lot of capitalism in there when I'm seeing about, the workers in the field and, hey, why are you complaining? I made a deal with you at this amount. I made a deal with you at that amount. There's no federal minimum wage there. There's a mutually exclusive, right, between laborer and worker, right? So I see that. I see making your money work for you. Instead of this, go to work, find a job where they're at least paying you this much an hour, work this many hours, collect that money, save it. And I see the biblical example being much more diverse and fruitful, dare I say capitalistic in the fairest sense of the word. And then on the other side of that, being able to be, not only having the joy with that, but being able to be that much more generous with that money, to be able to work for the kingdom. So I would say to Christians listening right now too, this has a larger mandate of also understanding that the way we think about money, the Western Christians anyway, the American Christians, we've just kind of accepted this as a whole and went, oh, this is the way money works and the way we're supposed to handle it. I would say no, we have a much higher biblical standard, and one that I look at and go, not only works better for you, it also makes you wealthier. It makes the people around you blessed and wealthier. It can do many more things for the kingdom of God. And at the end of the day, it's actually an easier way to live when you have both financial security and you're understanding the world and reality in which God created and how money and giving and lending and borrowing actually works. One of my favorite proverbs And I've had people quote this proverb to me for to come against borrowing, but Proverbs says the borrower is slave to the lender. Now, it doesn't say don't borrow money. It just says, look, there's some responsibilities there. Know exactly what you're getting into. If you sign a contract, your oath, if you're borrowing money, right? So there's biblical principles there that if we dive into the Bible, I'm getting on my soapbox here, but give me a second. If we get into the Bible, there's a lot of financial literacy, godly principles that reflect the character of God that will show you how to truly use your money. That's why I was excited to have you on, because you're doing this. There's guys where you can get whole life. There's guys that can give you a plethora of financial options. But then there's guys like you who can do that, but also have the Dominion mandate, who have the theological and biblical convictions, and go, this is why we're doing it, and this is how I can help you through it. As we finish this up here, and you can touch on anything I just said there, though, I'm assuming you have, someone comes to you, they listen to this, they go, hey, we're interested in talking to you. I'm assuming you walk them through the process. You're there for them. They're part of the family. They can come to you for questions and guidance, things like that, correct?
Right. So we set up a free discovery call. All my calls are free, but we call it a free discovery call anyway. But we set up a discovery call so that we can get a baseline. Where are you? What are you, a saver? Are you a spender? What money do you have coming in? Do you have any ideas how to build more, income? And then we take all that and we come up with a plan. So in the discovery call, it's just a conversation. They get to know me. And so to do that, you just email me at banking@privatefamilybanking.com. That's the word banking, BANKING, at privatefamilybanking.com. So they can email me, and then I'll send them a link to set up an appointment. But I did want to key on a couple things you said. Tithing is a principle in the Bible, and saving money, paying yourself first. They say after you have to do your tithe. And so that's what we're saying, is pay yourself. So our system is a sort of a pay yourself. I think there was the book, it's not a biblical book, called The Richest Man in Babylon, and that whole concept of paying yourself first. The other thing I would charge, and I think you get this because you're an entrepreneur, is that the average guy today, our Christian brothers, God love them, they're going to have to get out of the idea that a W-2 job and sitting back and waiting for the next promotion, it's not going to be there. They're not going to get a 10 or 15% raise likely. They're not going to get a stock option program likely. They're going to have to get a side hustle. Now, I do recruit agents. I do build a team. I have a team of agents right now all over the country. We sell in 44 states. I do help people get started in this business as well. So if you're, even if you're a young man, my two great agents are both in their 26 and 28. So my son just joined me. He's 27. He's in sort of learning mode, but he started out by having his own policy, his own banking system, and he used it to do real estate on a small level. But he was only 23 and he got started, and he bought his first vacant lot and then built a house, sold it during the peak of the rise in prices here in South Texas. So this can be done, young, middle-aged, no matter what age you are. If you're pre-retirement, we'd like to especially have a talk. And if you're in retirement, there are also some things you might consider changing, and as well looking at your grandkids and your kids and what you can do for them. So it is a broad spectrum, but the idea of paying yourself and saving money for the future in an effective way and learning how to harness the power of uninterrupted compound interest, that's what this is all about.
Yeah, love it. All right, Chuck, we'll get going. I appreciate you being on the podcast, taking time with us. Obviously, guys, if you're listening or watching, you can just click below. We'll have Chuck all linked up if you want to reach out to him, learn more about how he can help you. Chuck, you got a final word before we get out of here?
Yeah, I'll send you those show notes if you don't have them, and you can put the links. I have a free ebook called Protect Your Money Now, how to build multi-generational wealth outside of Wall Street and avoid the coming banking meltdown, I still think. So a lot of people don't know a closing word. Don't depend on the FDIC. They're bankrupt. They're not going to be able to, if there's a bank run, they're not going to have your money. You have a contract with us. You get a contract. You have guarantees in that contract. It's a unilateral contract. It means the insurance company is really on the hook. They have to pay up, and they have to have reserves far in excess. The banks right now have to have zero reserves. I put that in my book. During COVID, they released the reserve requirements on the banks, and to my knowledge, they never put them back in. You can find it at irs.gov and say, what is the bank reserve requirement? It doesn't exist. So there's something crazy going on in the banking world. There is a video called The Banker that was done about 14 years ago. You can find it on YouTube. It'll open your eyes to what the banking system is. My friend Barry Dyke, he's a distant friend, but I call him he's a colleague. He does what I do. Let's call it that. He wrote a book called The Pirates of Manhattan that'll open your eyes on the stock market. Be careful out there. You're not going to get rich quick, and you can lose your money in a whole hurry of a time. And that doesn't mean we're not going to see a boom in the stock market, but be careful with what you do moving forward.
Yeah. No, that's good stuff. Fair warning. Chuck from Private Family Banking, finance yourself. He says, I absolutely love it. Thanks for being here, brother.
All right. God bless.
All right, guys, thanks for listening to another episode of Dead Men Walking Podcast. As always, you can find out more about us at DMWpodcast.com. Heck, go there and get one of your Dead Men Walking mugs or even one of the new Job 13:5 shirts. How about you shut up and let that be your wisdom? Sometimes you just have to quote scripture to the pagans, whether they like it or not. But as always, we love you guys interacting with on social media. We love you guys telling a friend about the podcast. That's how we grow, bring glory to God. And remember, the chief end of man is to glorify God and enjoy him forever. God bless.
Be sure to check us out at DMWpodcast.com, where you can purchase the best and snarkiest merch on the internet, support the show, and leave us a review or message. Dead Men Walking can be found on Facebook, Instagram, and YouTube at Dead Men Walking Podcast, and on Twitter X at Real DMW Podcast. The Dead Men Walking Podcast is part of the Fight Laugh Feast Network. For exclusive show content, be sure to download the PubTV app and become a member. If you're a business that needs to reach hundreds of thousands of potential customers in your demographic, podcast advertising might be for you. Send all inquiries to deadmenwalkingpodcast@gmail.com.
None your biscuit.